All right, let's talk charts, guys. Let's talk charts. What a month it has been. What a month. Um, Absolutely great performance of me. No fear, no greed. Trade the plan the trades. Six trades in total, three wins, one loss, and two break even trades. So this was my first trade. It was a loss. Thought swing would be formed here. We got early sellers over here. Well, what turned out on the high time frame view over here. Turned out this was the trade after, so this is where I got stopped out on the first trade. We got another set of early sellers taking out this low that led to that high. You see Frankfurt pushes up to take more liquidity, so my idea was to short there. Made a case study about the trade, by the way. First thing, should I take partials at these low? Nah, because we took high time for liquidity, so this is not like this previous daily high in Asia high. That's like a large liquidity pool, and this is just a minor liquidity pool. So you want like at least two trade liquidity pools maybe to be taken. So I target the second liquidity pool and close my trade completely over there. Total of 4.928%. Then oh, can I remove this? Then trade after that was this trade. And you can see break structure, taking this leg up here, I think. Or what did I use for this? Oh no, so we broke minor over here, and then we get the confirmation entry. We got the break structure over here. So this is my leg from high down to low. Came into the discount, and that's where I took the trade from. Continuation, and then we came below here. But already after this low, I reduced it. So break even trade after this from the first trade. Yeah. Then we got this trade. This was the first trade using the different confluences. Got early sellers over here. Then we got a sweep of Asia high. Asia high already took previous daily high and previous weekly high. So we want to look for shorts and took the buy to sell move, entered 1 pip reading room, and price smack down. What a great trade this was. Could have taken partials to probably at 1 to 5 because it was within the liquidity range. Then the third trade. Why did I take a screenshot of what? Ah, okay. I don't know why I saved the screenshot. Dumb. It's the same trade, right? Oh no, no, it's a different trade. It's a different trade. Uh-huh. Oh, this was sorry. All right. I was like, look, I didn't understand it. But you got liquidity sweep, previous daily high, Asia high taken, early sellers over here. Quick, a bit minor because it was on the 1 minute. It was not on the 5 minute. Break a structure, a proper break here, minor breaks here, and then we broke again. I entered from this 1 minute buy to sell move or 1 minute supply zone, and we entered there 1 pip reading room, and price came just below, so I reduced, and it was a break even trade. Then this trade, this was the last trade, I think. Was it? Yeah. So this was this week's trade. We came in minor, so I was not clear with this, but we had Asia high take and previous daily high take, and we had a huge impulse. I said you could wing this on my Instagram, so I will show you the charts later because this was a 1 to 9.1, but I will show you. I said like on Instagram over here, we can wing it, but I don't want to wing it, but I think you can wing it like all the way to the bottom. But I will show you. All right, so we got early sellers, quite a bit minor. We got some early sellers over here, but Asia High was not taken out yet. Then Asia High was taken, but this break was too minor and it had no like 5 minute supply. And then over here we came into that 15-minute supply zone. Didn't tap the 5 minute, but I was a bit what do you say it? Impatient maybe. Well, I was risking it anyway, so a bit intricate that's the word I was looking for. 1 minute breaks. I use this as my 1 minute supply zone, entered here. It actually came above here, but not on this feed, and my stop was below there anyway, and it melted down. Well, it actually took some time Took my partials at 1 to 4R. Perfect. Profit taken, was lucky with that. So I like 1 to 5 4R. But anyway, it came up then and melted down even further. So partial was still running, and then my partial got hit in the evening. Yeah. 18 something. So yeah, that was my trading week or my trading month. Absolutely great. Total percentage of, let me see. Um, this one plus this one plus this one. So 13.44%. That's great. That's absolutely solid stuff. Now let's go to the charts and see what happened today. Now walk it out. So yesterday we took previous daily highs. We broke to the downside, create this bearish range. This bearish range can now be extended down to here. And my trade, this was 1 to 9, so we can actually measure that out. 26 was the entry to 26. Oh, this is a long trade. Nice, bro. Short trade. There you go. 26. And my stop was 304. There you go. So this is my trade, which hit 1 to 9.1 over here. There you go. 9109. All right. And then I said you can swing it all the way down. Look at where it is now. It reached 1 to 25, but you can keep it. You can hold this trade. I don't know if someone is in this trade, but you can hold it all the way down here. 1 to 52. Trust me. I promise. No, I don't promise anything, but you can do it. All right. So that was that trade. Let me actually keep that on. No, let me take it off. All right. All right. All right. So I actually haven't looked at the chart yet because I didn't trade today. So we took out Asia high. We got Asia low building up here. We got Asia low, Asia taking previous daily lows. So longs might be on the card. I would definitely look for shorts, but there is a short setup nonetheless. So let's look into that. So 5-minute structure, I don't use it anymore. Barely. It's too minor. Why risk it? Just be patient. But we got a high, a low, a lower high, a lower low, and we reach discount on this range. Oh, oops, hold up. On this range, took internal range liquidity. We got this 50-minute demand over here, but it's a bit ugly as fuck actually. Well, let's use that. So we didn't came below here. So this demand is still valid for this one. But we can also just say we can use this 50-minute. Oh, that's already mitigated. That's unfortunate. Oh, but we didn't create a new low here. We did create a new low here and came back. A bit tricky one, to be fair. All right. I don't like to use 5-minute PYs anymore. But you got this PY over here that took liquidity. Sweep. So yes, this is your demand zone or supply zone. I don't know what the rules are for tapping into the supply zone, but we can see the price came into the 50%. We can look for a 1-minute confirmation because we are inside the 50% of the 50-minute demand supply zone. Oops, let's go up there. So what can we see? We can see our early sellers over here. They get taken out. This is loaded to that high. What a range, quite large. Then if we go to the 5-minute, we can see our market shift actually. There you go, beautiful, perfect. So you could either take this one, So this low that took that high, but we reached into the 50% of the 5 minute or 50 minutes. So we can actually, let me go to my rules real quick to affirm it. So 50-minute mitigation, 50% mitigation of a 50-minute POI. So around here's the 50%. That's been taken. There you go. Now it's very clear. So green means that we can look for 1 minute entries. And this is annoying. And what can we see? Oh, low, high, higher low, bearish break over there. We sweep this liquidity. Or actually that high, but we sweep it out. You got a market structure shift, aka break of structure, aka change of character, whatever you want to call it, just give it a name. Then we got our 1 minute supply zone. So we take this one, tuck it on top, get the 50% out. As soon as we break below, we look to enter here. And we get our entry short 1 minute. Let me see how big it is. So 50, 350, 340 is over here. That's way too big. So we take 0.5. So 50, 45. It's still quite large, but that's all right. And we put our stops above the high. Then that's a small range, 2.6, 3.1. And we can target Asia low. It's our first liquidity, 1 to 5.5, 55. And then as said, we will melt down. So in case you want to hold that, you have your partial. And that's now at a 1 to 24. So that's London. London swing for pre-London. Why pre-London? Because pre-London, the reason that price formed the swing pre-London is that because we took liquidity pre-London, we got an early sellers in Asia, inside the Asian range, and we mitigated the 50% of the demand. What's the reason to come higher? Yeah, we could maybe take out higher prices, but the institutions were not willing to, they're really ready to sell. So that's why we didn't go higher. And that's another reason you can't know that. You can't know that. But if you see this, you get your entries really early as well. You get your 1 to 5, I think it was over there. But price comes all the way back, actually, and it gives maybe gives even a break-even trade. Let's see. So according to my, oh yeah, actually gave a break-even trade. That's unfortunate. Break here, second break there. There's actually continuation trade as well. If you use this range, you can see, let me use, so you can see we came down here, came up, came down. Then you get another supply zone here. PI. So if you just take this trade aside, you can see another supply zone here. Took out the internal high over there. Let me show you. This one. Took that out. Bearish break. So this was our new range. Oh, that was a new range. And we can use the 1 minute supply zone for our entry then. Uh, uh, uh. Let's change this one. So that high down to that low, supply zone, and your second entry is again only 0.5 because it's you can even take it from this one actually, but look at it, that's enough room. 32. Let me actually check the range. So discount is here. You want to enter there. Perfect. Why are these so large? What the 20, 50. Again, stops above the high. That's your second trade. And that actually comes back to break even as well. And this you target 1, 2, 3. Oh, actually, no. So this one hits partials, 3.2% on the continuation trade. This one doesn't. So two trades. If you don't go break even, you have a nice short. Holy damn. Actually, you reduce your stop loss over here. You keep it above this one. So if you didn't go break even, I would go break even on this one, to be fair. So for me, it would have been a break even trade. If you don't go break even, you took your stop above this one, like here, you would have still be in the trade. So that's it for London. Were there logs? Yeah, there were logs. It's your entry. 1 minute. Hold up. I'm gonna mark it out first. Mm, Yeah. So Asia lows to previous daily low. Sorry, I was so silent. I was thinking. Asia low to previous daily low. Then we got Asia low being formed. We first take Asia high, step into this block that followed liquidity. We know we had this bearish range. However, we know that you have this range from this high down to this low. So we could maybe see price come up. Lows taken. Liquidity sweep, 50-minute demand being formed. You could also see it like high, low, lower high, lower low, lower high, lower low, lower high, lower low. Let me actually see if that is correct. It is. So that's a valid low. Bullish break. Range taps into 50% of the demand. So you can look for a 1-minute entry. And it's quite huge one. But you get your entry over here. And it only gives you 1 to 2.5. So that was London. Break entry, yeah. Then let's go about New York. Early sellers, early buyers. Big stop though, 2.6. And hit 1 to 3. So let me break it down. 1 hour demand zone. We tap into the 50% so we can look for a 5-minute confirmation trade. We get early sellers on the low time frame. We got a 5-minute market shift. We got the 5-minute supply zone. And we got our entry over here. And price currently at the 1 to 3. We would turn 1 to 4. So we still be running. Pretty straightforward, pretty easy. Why this one? Because this is our demand zone that took this liquidity. And the reason then to take use this demand zone also is that it holy shit, it's in the discount of the bullish range. So first of all, it took this low and led to a high. It was like the decisional move to break this high. And second of all, it sits in the discount of our overall bullish range. So that's reason enough to look for longs. Then we have this bearish range, where we can look for premium pricing to continue down. So yeah, that's basically it for today, guys. Yeah, peace out.